This is Clay Lehman with Resolute Real Estate and Resolute Property Management. Last week, Florida Realtors released their September 2019 real estate statistics. Today, I thought I'd go over that to help interpret what these numbers mean. So the first thing that I look at when I look at the updates each month is the median sales price. So the median sales price is that number where half the sales were under this price and half the sales were over this price. The distinction between median sale price and average sales price is that because the average sales price is the sum of all sales divided by the number of sales, averages can be influenced by one or two really large or really small numbers. Median sales price eliminates that kind of influence of those big numbers. So for September, our median sales price continued to rise. It's $170,000, which is a 3% year over year increase. The rate at which the median home price is increasing is slowing down, but there are other numbers that I'm going to go over with you here that kind of demonstrate why there still appears to be opportunity to invest in real estate and for continued appreciation. So the next thing that I'm looking at when I look at these numbers is the median time to contract and time to sale. And so this is where the Florida Realtors is gathering together. How long is it taking for a sale, for a property to go under contract? And then how long is it taking for a property to go from for sale to sold? And in both cases, these numbers have decreased year over year, and that continues the trend that we've seen. There have been a couple of months that have increased year over year, but primarily we're continuing to see a downward trend with these numbers. So when I look at this, the first thing I'm looking at is the median home price as discussed, then the time to contract, and then the time to sale. But the biggest number in my mind, particularly when trying to figure out where we are in the real estate cycle, that number, the most important number, is the month's supply of inventory. So the month's supply of inventory is what economists use to determine whether we're in a buyer's market or a seller's market. If there's a lot of inventory, we're in a buyer's market. If there's not much inventory, we're in a seller's market. It's better for sellers to be selling when there's not much supply. Economists look for 5.5 months of inventory to indicate we are in a balanced market. Anything above 5.5 months of inventory is a buyer's market. Anything below 5.5 months of inventory is a seller's market. And we have been in a seller's market for more than 4 years now. The reason I say 4 years, I think it's actually been more than that. That's as far back as the reports I have available to me today. That's how far back they go. We are at 3.9 months of inventory. Last year at this time, we had 4.4 months of inventory. It's crazy. Last year at this time, we were in a very strong seller's market. Well, at 3.9 months of inventory, we're in an even stronger seller's market. It's unbelievable. My expectation had been that we would start to see more supply hit the market, which we have. But what I wasn't expecting is that demand has kept up with that supply. So what we can see is that we've had new listings. We had 667 new listings this month. We've had over 7,000 new listings added this year, but our month supply of inventory continues to go down because our closed sales are keeping pace with our new listings. Now, that doesn't look to be the case this month, but what we're seeing is our pending sales are increasing. See, we're at 614 versus 551. Once a property goes under contract, it's a pending sale. It's no longer available as a part of inventory. And so that's why we're seeing inventory continue to be pushed down. Now, you're probably either asleep or have turned off the video by now, but you would have missed what I think this all means. What I think this means is that we still have some wind in our sails, if you will, on this current path of price appreciation. It's not going to go crazy, but until we start to see our month supply of inventory creep up, or we start to see it take longer for homes to sell, that's when you're starting to see some cracks in the armor, or some kind of, those are some things to be a little bit concerned about as they start to shift. But as of this recording, we're still seeing things pushing inventory down, demand staying high, So therefore, simple economics states that if demand is high and supply continues to lessen, the price of the product will increase. That's true for housing as well. So, if you're interested in investing in residential real estate in North Central Florida, please give us a call. Again, my name is Clay Lehman. I'm the president of Resolute Real Estate and Resolute Property Management, and we look forward to working with you. If you have any questions or comments, or if you see things differently, please leave them in the comments. I would love to engage in a conversation about this with you. Thanks so much. Have a great day.